Welcome, everybody, to this episode of Profit Points, where we talk to businesses, industry leaders, and other professionals about being in the crazy world of running your own business. And today, Shawn and I are going to talk about how can investing affect your taxes. This is going to be a little bit of a strange conversation, I think, because we're going to talk about what investing means. And some people think, oh, well, investing is like taking my money and putting it into the stock market, when in reality, there's all different kinds of ways of investing, especially as it relates to businesses. So that's what we're going to talk about today, and hope to get some really good information out there.
Yeah, this is an interesting topic, an interesting concept, because, like you said, most people think it's just investing is just putting the money out in the market someplace, but there's all kinds of ways a business can invest.
Yeah,
right?
So let's talk about what those ways are, right? As a small business owner.
So, number one is investing in business assets. So, your company may require equipment, vehicles, real estate.
Software can be a great example of how to automate things.
Yeah, websites, a lot of different ways. You kind of lump all of those into the business assets.
Right.
What does your company need to operate and run as efficiently and as productive as possible?
Right. So when a business is first starting out, you invest in your business to acquire all of the things that are needed to run your business. If you're a service-based business, you probably still need some kind of software. You need some sort of computer, my guess. I mean, most do, or tools for your trade. Whether it's service-based or if it's like a construction or something like that, all that has to get done and purchased up front. But then as the business changes and evolves, you kind of have to plan for those additional influxes or investments into the company, because things change and tools wear out, technology changes, people change. So you find yourself in a different position than what you were in when you first started.
Right. And as you grow, you may add new employees, and those employees need those tools to also do what they need to do. Or you may shift the responsibility of different tasks. So say you're as the business owner, you're the doer of everything. Now maybe you've hired some people, so maybe you're shifting those tools to them to use, and where now you're acquiring different set of tools or technology to manage.
So that's a great point that you say about employees, because employees are also a form of investment.
Right.
You're investing in additional people or additional time, or even additional contractors to do things for you that maybe initially you didn't need, right? Or you did realize you needed it, but you did it yourself, or you're just, something's changed within your business and you're looking to do something differently. So an investment in people is also a type of investment.
Right. And then, then there's the typical, what we talked about mentioned earlier is investing in the market. So whether that is taking your extra cash and investing directly in the market, or through some sort of retirement plan for the company, for your employees, investing in that way through employee benefits.
Employee benefits can also be like health insurances that you want to help supplement for your employees, or something to that effect as well. Not that all businesses need to do that, but that maybe something that's priority to you.
Exactly.
So all of these things have implications.
Yeah. So with investing in business assets, what you're trying to do is you're trying to improve efficiencies. You're trying to be as productive as possible with that. So, as you mentioned, technology changes constantly. I know for us in our firm, we're constantly evaluating new technologies and how can we improve, and not only internally but externally with our clients and how they, get information from us.
Exactly. So, efficiencies also can then lead to the growth of the business. These are kind of implications that we all hope to have happen. You see efficiencies, you see growth, you see prosperity. It's very well likely that sometimes by investing in things, things might slow up a bit or may see a little bit of a downturn. Not every decision that we make when we are investing in our businesses is going to produce the result we want. So
yeah, you do have to allow for some learning curve on these new technologies, or even if it's a new piece of equipment. How do you may not be as efficient with it, or as it will be, but knowing that you're going to have to invest that money and that time. Investing time is
as well.
is critical to maximize what you've just invested in these new technologies.
Yeah. So with that, we're hoping that our businesses run better, we make more money, we are more profitable. If we're investing money into the stock market, we're hoping that the stock produces a gain, right? And when we're talking about stocks, one has to be careful and remember that if you're investing in stocks, you don't have necessarily a gain until that stock is sold. Now, if the company decides to issue interest or dividends on any of the holdings that you have, that income is picked up as income and would be kind of a gain in a sense for you. But the actual gain on the stock itself doesn't get recognized until it's sold.
Yeah. So when you're talking about taxes, the income that is earned during the year, dividends and interest, that's taxable in that year that you receive that, or it's reinvested into the market for you. But like you said, the gain, hopefully there is a gain, right? Isn't recognized for income tax purposes till you sell it. So, you want to try to wait for long term, because long term capital gains rates are better than short term capital gains rates. So you want to hold on for the long term, if that's the strategy that you're looking at. But yeah, so the tax implications and all this stuff, we're talking about investing in business assets and employees, and some of these other things. You could have expenses related to that reduce your taxable income as you pay out for these new technologies and these investments. And then hopefully that growth eventually will lead to more profit for you down the road, but you will have initial outlay for sure.
Well, I've seen people that have been, on the fence about hiring a new person, knowing that the person would produce potentially more income, depending on the type of employee it is, of course. But initially, there is a period where there's a little bit more outlay of expense than what the employee is generating, because of them just getting acclimated to your business and to your clients or customers, and just getting used to things. It takes some time to kind of ramp up someone's full capacity or efficiencies. And so, there could be instances in the beginning where you may see a decrease in your gross profit or your net income because of putting extra funds out for people or tools that have yet to find their full efficiencies.
Yeah, I think what's really important in any of these investments is have a plan in place of how you're going to integrate these new investments into your business, whether it's new assets, new employees, as to for training, for implementing these new technologies or assets, and allow for that proper planning up front will help you once these things come into play and put in place into your business, so that maybe that employee is more productive quicker, with proper training, with proper tools, all that stuff. So getting a plan in place up front on how this is going to get integrated into your business is really important.
Yeah. So one thing I do want to mention about when you're purchasing fixed assets for your business, many fixed assets have useful lives, and the IRS kind of dictates those useful lives based on what the type of asset that it is. So for instance, I'll give an example. A computer has a 5-year useful life, whereas maybe office furniture has a 7-year useful life. Now, the IRS assigns these useful lives, and when you have an asset that has a useful life more than 1 year, we have to record them as assets. We don't necessarily get them as a full deduction in that year unless we take advantage of some accelerated depreciation code sections that are within the IRS Internal Revenue Code. I don't want to get into depreciation, but just know that fixed assets, typically with a useful life more than 1 year, are set as a fixed asset and don't go right to an expense.
Right. Yeah. The IRS does allow up to $2,500 on a de minimis safe harbor rule.
Right.
So if you buy a computer that's under $2,500, you could expense it if you make that election. And then it's treated for each different item. So buy 10 computers, all under 2,500, all of them can be expensed. But yeah, when you're looking at these things, sometimes we do have to look at the longer tax deduction write-off period than just that initial year, and some of that may come into play with your tax situation overall. We may not want to accelerate depreciation in the current year for various reasons. We may want to smooth that deduction out over the useful life of the asset. So there's a lot of different scenarios and options for you with those that we could look at and help make the best decision.
Yeah, exactly.
Yeah.
So I think that, it was really interesting to see, I think people mostly think of investing as like stocks and buying, stocks and bonds in the market, but there's other ways to consider investing. And we just wanted to kind of bring to light these ways, as well as the implications of them, whether it's financially or within your company, culturally, and then also the tax implications. Like we said, what can happen on your taxes with some of these investments.
Yeah. It's a great problem to have when you are wanting or needing and wanting to invest in your business to help it grow, or to maximize your productivity. It's a good position to have. Yeah.
So thanks, guys, for joining us today, and we look forward to seeing you on our next podcast. If you like what you're seeing here, check out our other content and follow us and subscribe on YouTube, and visit us at www.moderncpaonline.com. Thanks, guys. Take care.
Thank you.